Aloha, YouTube investors. How is everybody doing today? My name is David Jansen. Welcome to my channel. I'm going to have a couple videos for you today showing my winners and losers for the month of February. It's going to be my M1 Finance brokerage account and my Robinhood portfolio. My Fidelity account doesn't do, it's just not very YouTube friendly. It doesn't do a breakdown of all time, month, quarterly, yearly, weekly. It only does by the day and total. So total all time. So I'm not going to be able to show you Fidelity, but if you want to see a separate video, I'm going to do one at the end of next week of all three of these brokerages, and more than likely tomorrow or sometime later on this week I'll do my dividend tracker video so that you can see all of even my smaller accounts with Webull and Public Investing app and SoFi Invest and Doe Finance. You can see all those are put into my dividend tracker video, and you can see how that performed basically, not for the month of February, but it's just kind of a monthly update type thing, just because, well, just kind of more of I'm moving it more to a monthly thing. If it wasn't before, it is now. So, but you can see where it was at about $21,000 for the month of January. I will have a card pop up right around here at about the minute-and-a-half mark. You'll probably see it pop up around there. So, but let's go ahead and look at my Roth IRA. Originally, I tried to do 3 videos in one. Those almost are always like 17 minutes long. I know that's not very long. It's not a long time for me, especially when you're watching somebody else's failures and victories, I guess. You know, it's kind of exciting, you know, to see how somebody is. And you can leave your encouraging comments or just constructive criticism comments on these types of videos and stuff, which I always really appreciate, and I take them to heart. And I do want to thank everybody, give a big mahalo to everyone who has subscribed, continues to follow my channel and likes my videos. So please like this video if you haven't, and also subscribe to the channel if you haven't. And like I said, you can always share with your family and friends as well too. So thank you very much. Mahalo to everybody. Hope everyone is safe and healthy. So here's my Roth IRA. I started this in September 2019. I originally finished the year of 2019, because I really did start late in the year, with a little over $1,900. When I first started investing, I believe it was in May of 2019, and I had the Stash app and the Acorns app. And then either both or one or the other decided to increase their fees or to add fees. So I went looking for other brokerages, and I found Robinhood, and I was like, okay, it's 0 commissions, no fees with Robinhood. But at the time, they weren't doing fractional shares. And I was starting to really build up my Stash portfolio because of fractional shares, doing like $5 a day, $20 a week, something like that. That's why I love fractional shares. And the majority of all of my portfolios, not just my Roth IRA here, but Fidelity and Robinhood, now that Robinhood has fractional shares, have been purchased at $5, you know, by $5 of this stock, $10 of that stock, $100 a week here, $50 a week there, or $25 a month, just depending, because you don't have to spend the full $200 on Microsoft, or you don't have to spend the full $3,000 on Amazon. And you can see that in my other videos where I own not even a half a share of Amazon when I bought at $2,500. But you can do that because of fractional shares. So, but at the time, Robinhood didn't have it. So I went looking for another brokerage. I found M1 Finance. They do fractional shares, and it was 0 commissions, no fees. So I signed up with them with an individual account. I did move that individual account over to Fidelity. I'll have a card video pop up at the end for you at the end of this video, so you can see closed M1 Finance account. And if you want to just look through the Fidelity playlist for more than just one video, you can do that as well. But I kept my Roth IRA because I do like the platform. I do like this brokerage. I like how organized it is. I like how you can put these pies together. You can put all these slices in your pies. You can call it an apple pie if you want. You can name them whatever you want. I named mine Roth IRA. But originally I had an individual account, so it just said individual account. But a Roth IRA has great benefits for you when you're at or over that retirement age. Once you hit a certain age, you're allowed to withdraw this money tax-free. You're not taxed on it. Where a traditional IRA, individual retirement account, you're going to pay taxes. You pay taxes when you put it in, and then you're going to pay taxes when you pull it out. So my personal opinion, and I'm not a financial advisor, an economist, or an accountant, so you should do your own research. Just don't take my word or someone else's word for it. There's tons and tons of literature, books and articles that you can read on investing and stuff like that. But in my personal opinion, everybody should have a Roth IRA just for those tax benefits. So I started this in September 2019. Now I do have another individual account with M1 Finance because I do want to thank the person. Oops, sorry, something went wrong. I do want to thank the person who used my referral link in the description there to open up their M1 Finance account. So M1 Finance won't give you that money over to, okay, not sure what's happening here. M1 Finance won't allow you to put that money into, I think it's logging me out, into a Roth IRA. It will only allow you to, okay, there we go, back up. They will only allow you to put that into an individual account. So I had to open up another individual account. So they're verifying some more information. I did put that in there again the second time today, or not the second time today, the second time in the last 2 weeks. So thank you, mahalo, to the person who did use my referral link. And if you would like some free stocks or free money or whatever, there are referral links there for Webull, Robinhood, M1 Finance, Public Invest, SoFi. All of them are going to give you something. So when you open up an account with them. So I am going to have another individual account with M1 Finance. I put Walmart in here just because going through the process of opening this, it kind of just pointed you through that direction. So I just went through that direction. But I'm probably just going to keep that money in here. Maybe I'll withdraw it later on if it allows me to, or maybe I'll just put another ETF inside here and leave it as is. So, because they won't allow you to transfer it from an individual account over to my Roth IRA. It won't, if for some reason M1 Finance doesn't do that. So, but for all time, like I said, you can see almost 16% in my returns. At one time, if you saw my other videos, this was at 27, 28%, almost 29% returns. Of course, the stock market was kind of up and down through the month of February. That happens. Like I said, investing in the stock market. I really don't have a stuttering problem, but I always do this once or twice through all of my videos. But investing in the U.S. stock markets, or any stock market for that matter, can be very risky. So you do want to do your own research. And you shouldn't invest money. You shouldn't treat it as gambling. You shouldn't treat it as like going to the casino. You should really only invest money that you have kind of laying around. So instead of putting it in a savings account where you're not even getting 1% interest rate, you can pick a couple stocks or a couple ETFs and get a little bit better returns. So with what I've set up, I'm getting, way better return at 15.96% for the month of February than I would have putting it in any high yield savings account that is out there right now. So, and you might be able to find one that pays you 2% yield interest in a high yield savings account, but it's just not going to be that or much more than that for a long, long time. So if you have some extra money just sitting in a savings account outside of your emergency fund, then you can probably put it into the stock market once you've done your research and stuff. So my funding history, back to this again, September 2019, $1,900. A little over $1,900 is what I did for this year. Right over here it tells you $6,000 maximum contribution. For 2020, I did hit the $6,000. My goal is to hit the $6,000 every single year. I just have other strategies with Robinhood and Fidelity. So I did hit this for 2020 because I have a small Roth IRA that I opened up. I don't even remember exactly when I opened up, but I have a little over $200 in that one. And I have a video talking about why I did that. Don't want to get into it right now. But if you are interested in seeing that video, you can leave a comment and I can move you over to that video. I believe it's in my Webull playlist. For 2021, I've only put $50 into, but I do plan on hitting the $6,000 for this year and every year going forward. So that is the plan because of the tax benefits. You might as well because of the tax benefits. So my earned dividends up to this point is a little over $170. My market gain, as you can see here, and then total after the earned dividends. And the reason why I'm getting paid these dividends from these companies is because I choose to be mainly a dividend investor. So the majority, all of these companies pay a dividend, and the majority of them are dividend aristocrats and dividend kings. So in my blue chip slice here, dividend aristocrats and dividend kings, and all time you can see only Kimberly-Clark is trading, down 11% now, Kimberly-Clark. I'm not sure what's going on with them, why they're not trading very well, but they're consumer defensive, so they should be doing very, very well. And that's for all time. So, but when we look at the month, for the month of February, you can see here my boot ship slice. This is how much I actually have invested in these companies, over $2,800. My total gains is down. My total return is down 3.32%. But because of my earned dividends, and this is why I like dividend investing, not only are you getting paid this from these individual companies, but it actually makes your gains, your total gains, look better because I got over $5 and earned dividends. So instead of a market gain loss of $104, it's only $98 and some change. So going through these holdings here, as far as winners and losers are concerned, you can see only McDonald's, which I don't even go to McDonald's. Every now and then, like maybe every 6 months or so, I'll get McDonald's French fries, or if I'm craving an ice cream or something like that, I'll get a McDonald's ice cream because it's only like $1, I think. But I don't even go there, but I am thankful that they are performing very, very well for me. I don't own a lot of shares of McDonald's. You can see right here, I only own 2 shares at an average share price of $178. So my great return is because the stock now is trading at $208. So, and it almost always, when the stock market is doing good, this McDonald's is almost always, and once they get their stores fully 100% capacity around the world again, I wouldn't be surprised if the stock is back up at $230, $240 again. So, but then the others, Air Products and Chemicals, Lowe's, and Kimberly-Clark, along with Colgate-Palmolive, Procter & Gamble, and the utility company NextEra Energy, all of them basically in the red for the month of February. Let's see, total portfolio for the month of February here, you can see is down over 3%, but I did get a little over $13 in earned dividends for the month. And I can show you what companies paid me these dividends for the month of February. So we go all the way back to February 2nd here, where I was first paid a little over $2 by American Tower Corp. And then it was Lowe's, Air Products and Chemicals. Apple paid me $1.49. Colgate-Palmolive over $3. Procter & Gamble over $3. And this grows because the more shares or fractional shares, you don't have to own a full share, but the more that you own of a company, if they pay a dividend, that's the majority more that they will pay to you. So with Realty Income, I believe I own 11 shares or 13 shares or something like that with them, and that's how much they paid me for those 13 shares. So just think if you own like 100 shares, which is kind of the goal, because I believe in these companies. I think these are solid companies that I have in this portfolio because this is my retirement. So I hope to grow this one over time with more solid companies, but as of right now, I have the 3 for different strategies. So Real Estate Investment Trust, are we back here at the month? Yeah. So for the month of February, the total slice was down over 6%, almost 6.5%. And the individual holdings, Realty Income, was actually good for the month of February, which is kind of surprising. It's been struggling ever since the crash in March of 2020 to get back to where it was originally. And then Equinix, Digital Realty, and American Tower, 3 companies that I really like for the future, as American Tower does cell phone towers, Digital Realty and Equinix is data centers for cloud storage and stuff. And then this ETF kind of just grabs up all the other real estate investment trusts that I haven't invested in. So this ETF, ticker symbol VNQ, and Realty Income finished the month of February in the green. That's for my REITs here. And then the last slice here is my technology slice, which I have 2 very solid companies, Microsoft and Apple here. Surprised that Apple, or actually both of them for the month of February, did not do very well for the month. This slice for the month of February, you can see I have $1,400 invested, was down $40 and over 2.5% at 2.66%. And I got $2.05 for the month of February from dividends. That was, I think it was just Apple and this ETF right here, Information Technology ETF from Vanguard. So I am surprised. I am always surprised when Apple finishes in the red because Apple has been doing very, very well for me all time. Even if you look at my video on how M1 Finance performed for 2020, and I think that video is called Is M1 Finance Still Relevant in 2021? I'll have a card pop up there at the end of the video as well too. You can see my gains just really, really good, over 66%, almost 67% with Apple, almost 52% gains all time with Microsoft. But they didn't do quite that well for the month of February, so we're looking for March to be a little bit better. I'm thinking maybe people were just taking profits through the month of February. That's why there's a little bit of a correction or a pullback. It was earnings season, so I think some people, and this is just my opinion, when a company that they own is a solid company and the stock went way up and they had a good earnings for the quarter and for the year, they're like, okay, still solid, still good, so I'm just going to take some money, trim some money off the top. And you can do that when you own a ton of shares. I don't actually own enough shares to take profits. I did do it with Tesla once. I sold a little bit of my Tesla and took $200, but overall, I really don't have enough shares to be able to do that. So, and the last three here for M1 Finance are these ETFs. This one tracks the Dow Jones Industrial Average, ticker symbol is DIA. They pay a monthly dividend. Boeing actually did very well there in this ETF today with the Dow Jones Industrial Average. So is McDonald's and Apple. This one here is, are we still in the month view? Yep, still in the month view. Okay, and then this ETF here is the Vanguard International High Dividend Yield. So this is really just an income type ETF for you. So you know you're going to get paid regular dividend payments from this ETF just because it's companies with high dividend yields internationally. And then the last one here tracks the S&P 500, the 500 largest companies in the U.S., and the ticker symbol is IVV. I use iShares Core S&P 500 tracker. So that is my M1 Finance for the month of February, how it performed. Not really great overall, but like I said, the stock market can go up and can go down. So that's why I try to buy the dips. So hopefully I will have enough money to be able to buy the dips into some of these holdings, especially my REITs here. I would love to add to any of these to gain more shares of those. Almost all of them pay a good dividend, and I do believe them to be future-proof type companies. So hope everybody has a great day. Continue to be safe and healthy. Mahalo and aloha.